The recent halving event in the world of Bitcoin has effectively slashed the rewards for miners by half, thereby slowing down the creation of the cryptocurrency. Following this event, Bitcoin's value has remained relatively stable around 63,907, but its future trajectory remains uncertain. Now, all eyes are on what will happen down the road. Beyond Bitcoin's long-term price behavior, which relies heavily on other market conditions, Bitcoin experts point to potential impacts on the day-to-day operations of the asset's miners themselves. But, as with everything in the volatile cryptoverse, the future is hard to predict. Here's what you need to know. What is Bitcoin halving and why does it matter? Bitcoin halving, a pre-programmed event that occurs roughly every 4 years, impacts the production of Bitcoin. Miners use farms of noisy, specialized computers to solve convoluted math puzzles. And when they complete one, they get a fixed number of Bitcoins as a reward. Halving does exactly what it sounds like. It cuts that fixed income in half. And when the mining reward falls, so does the number of new Bitcoins entering the market. That means the supply of coins available to satisfy demand grows more slowly. Limited supply is one of Bitcoin's key features. Only 21 million Bitcoins will ever exist, and more than 19.5 million of them have already been mined, leaving fewer than 1.5 million left to pull from. So long as demand remains the same or climbs faster than supply, Bitcoin prices should rise as halving limits output. Because of this, some argue that Bitcoin can counteract inflation. Still, experts stress that future gains are never guaranteed. How often does halving occur? As per Bitcoin's code, halving occurs after the creation of every 210,000 blocks, where transactions are recorded during the mining process. No calendar dates are set in stone, but that comes out to roughly once every 4 years. Will halving impact Bitcoin's price? Well, only time will tell. Following each of the 3 previous halvings, the price of Bitcoin was mixed in the first few months and wound up significantly higher 1 year later. But as investors well know, past performance is not an indicator of future results. At the time of the last halving in May 2020, for example, Bitcoin's price stood at around 8,600 tut and then climbed almost 7-fold to nearly 56,705 by May 2021. Bitcoin prices nearly quadrupled a year after July 2016's halving and shot up by almost 80 times 1 year out from Bitcoin's first halving in November 2012. Friday's halving also arrives after a year of steep increases for Bitcoin. As of Friday night, Bitcoin's price stood at 63,907, that's down from the all-time high of about $73,750 hit last month, but still double the asset's price from a year ago. Much of the credit for Bitcoin's recent rally is given to the early success of a new way to invest in the asset: spot Bitcoin ETFs, which were only approved by US regulators in January. A research report from crypto fund manager Bitwise found that these spot ETFs, short for exchange-traded funds, saw $12.1 billion in inflows during the first quarter. Experts suggest persistent or growing ETF demand, when paired with the supply shock resulting from the coming halving, could help propel Bitcoin's price further. Bitcoin is expected to have a strong performance over the next 12 months. Some industry experts predict gains reaching as high as $400,000, but the more consensus estimate is closer to the $100,000 to $175,000 range, while other experts stress caution, pointing to the possibility that the gains have already been realized. In a research note, analysts from JP Morgan maintained that they don't expect to see post-halving price increases because the event has already been priced in, noting that the market is still in overbought conditions per their analysis of Bitcoin futures. What about the miners? Miners, meanwhile, will be challenged with compensating for the reduction in rewards while also keeping operating costs down. Even if there's a slight increase in Bitcoin price, halving can really impact a miner's ability to pay bills. Better prepared miners have likely laid the groundwork ahead of time, perhaps by increasing energy efficiency or raising new capital. But cracks may arise for less efficient, struggling firms. One likely outcome is consolidation. That's become increasingly common in the Bitcoin mining industry, particularly following a major crypto crash in 2022. A recent research report found that total miner revenue slumped 1 month after each of the 3 previous halvings. But those figures had rebounded significantly after a full year. thanks to spikes in the price of Bitcoin as well as larger miners expanding their operations. Time will tell how mining companies fare following this latest halving. But experts predict that big players will continue to expand and utilize the industry's technology advances to make operations more efficient. What about the environment? Pinpointing definitive data on the environmental impacts directly tied to Bitcoin halving is still a bit of a question mark. But it's no secret that crypto mining consumes a lot of energy overall, and operations relying on pollutive sources have drawn particular concern over the years. Recent research published by the United Nations University and Earth's Future Journal found that the carbon footprint of 2020-2021 Bitcoin mining across 76 nations was equivalent to emissions of burning 84 billion pounds of coal or running 190 natural gas-fired power plants. Coal satisfied the bulk of Bitcoin's electricity demands at 45%, followed by natural gas at 21% and hydropower at 16%. Environmental impacts of Bitcoin mining boil largely down to the energy source used. Industry analysts have maintained that pushes towards the use of more clean energy have increased in recent years, coinciding with rising calls for climate protections from regulators around the world. Production pressures could result in miners looking to cut costs. Ahead of the latest halving, JP Morgan cautioned that some Bitcoin mining firms may look to diversify into low-energy cost regions to deploy inefficient mining rigs. In essence, the aftermath of Bitcoin halving highlights the intricate interplay between market dynamics, technological innovations, and environmental considerations. We hope you liked the video. Stay tuned for more insightful content on interesting topics. Don't forget to like, share, and subscribe to the channel. Thanks for watching, and we'll see you next time.